One of the most commonly asked questions recently has been whether we should trust USDD. Is it safe? Is it going to go down just like Luna or UST? Well, today we are going to talk about that because after everything that has happened, when you hear the name Luna or UST, you almost certainly start thinking of the massive crash of Luna and the depegging of UST. And while that is likely going to remain the legacy of these coins, if we think a little further back in time, we can recall the insane pumps Luna saw in 2021, as well as the massive adoption of the Terra chain and the protocols within that ecosystem. Of course, almost all of that adoption and growth was caused by the rise in popularity and use of the native UST stablecoin. And while we have now seen the devastating result of UST not being fully backed because it was an algo stable, there is no denying that it demonstrated just how powerful a stablecoin can be as a tool to bring people into an ecosystem. Today, we're going to be taking a deeper dive into the Tron ecosystem and considering whether or not USDD could have similarly positive effects there as UST did for Terra Luna. I will also be covering how exactly USDD is different from UST and why those differences could potentially drive USDD to compete with the current top stablecoins such as USDT and USDC. Before I get started with that, make sure to subscribe and activate the bell icon so you do not miss out on more videos like this, as well as everything else I post here on the channel. So, to begin with, let's take a look at what distinguishes Tron from other blockchains. TRX originally launched on Ethereum but migrated to the Tron blockchain when it launched in early 2018. The blockchain is secured by a type of delegated proof of stake as the consensus mechanism, which utilizes a rotating group of 27 primary validators. Users can also operate 3 different types of nodes to contribute to the network. Tron was actually a bit ahead of its time when it launched, as it went live with a forked version of the Ethereum virtual machine called the Tron Virtual Machine or TVM. This is fairly common for new chains to do nowadays, but was not back then. The TVM allows developers familiar with working on Ethereum or other chains that are compatible with the EVM to easily start developing within the Tron ecosystem. Tron is a chain with high throughput and scalability, which it achieves through a couple of different mechanisms, including an application sidechain. One area in which Tron differs from a lot of other chains is that it launched with its primary focus on the Asian markets rather than the West. Something else worth mentioning is that the creator of Tron, Justin Sun, holds a prominent position within the Tron community in a similar way to how Do Kwon did with Luna, although not quite to the same level. This can be a pro or a con depending on your opinion, but there is no denying that having a leader to rally a community can of course also have its benefits. So now that you are a bit more familiar with Tron as a blockchain, let's dive into USDD and how it works. Before USDD launched and its earliest days of being live, some people were under the impression that it was basically a copy of UST with an even higher interest rate of 30%. However, after UST depegged and crashed, there were some major changes implemented to USDD in hopes that it will not someday suffer the same fate as UST. The most important of those changes is that USDD is to remain over-collateralized. This means that at all times, there will be more assets held in the Tron DAO reserves than what the entire supply of USDD is worth. USDD's chosen collateralization rate is 130%, meaning that the minimum amount of assets they hold would be worth 130% of the market cap of USDD. You can see a comparison of that 130% to the collateralization of other top stablecoins here. You will notice that currently the collateralization of USDD is far more than 130%, and this is because the reserves gathered to back it are significantly larger than the market cap of USDT because it only launched around a month ago. As I'm sure many of you are wondering, the assets being used to back USDD were gathered from a number of backers, which are shown here and include some big names like Alameda and Multicoin. In the same way Luna was burned to mint UST, TRX is burned to mint USDD, meaning that as USDD grows in popularity, more TRX will be burned to increase its supply. This system of burns provided massive upwards pressure for Luna in 2021 as UST grew, so there is potential for that to happen here as well. To fully understand why USDD has the potential to drive growth in the Tron ecosystem, you need to understand how important stablecoins are in the crypto ecosystem as a whole. 3 of the top 10 coins are stablecoins, and USDT is the top coin by trading volume nearly every day. This is because stablecoins are used on practically every exchange to pair other coins with, as well as in nearly every DeFi protocol. Crypto is volatile, and stablecoins provide people with a way to cash out without going through the tedious process of moving back to fiat. There are, of course, already multiple popular stablecoins that the majority of crypto users trust, such as USDT and USDC. To reach the same level of success as those, or perhaps even surpass them, USDD needs to really stand out, and that is what it was created to do. As we can read here, its goal is to provide the blockchain industry with the most stable, decentralized, tamper-proof, and freeze-free stablecoin system. As you may know, USDC and USDT are able to be frozen by the centralized entities that issue them, and while that is not something most people have to worry about, I think most people would prefer to not have to worry about their stablecoins being frozen at all, and that is made possible with USDD. Furthermore, while centralized stablecoins do usually undergo audits to verify they are fully collateralized, those are performed by third parties, and the full details of what assets back those stablecoins are not always made public. With USDD, the reserves are fully transparent on-chain and verifiable by anyone at any time. Last, but definitely not least, USDD is making it possible to earn some very nice stablecoin yield right now on Tron. You can see the rates available here for USDD and other stablecoins, and they are higher than you will see in most other places. It is important to note that these yields do fluctuate and will not remain this high forever, because while right now USDD is in a supply expansion stage, they can only continue until USDD reaches around that collateralization ratio of 130%. Also, while these are labeled the risk-free rates here, there's always going to be risk when using a DeFi protocol, so do your own research into where you deposit your stable coins. If you need some ideas of where you can stake or farm USDD for even higher yield than the risk-free rates, then you can check out this list of protocols on the USDD site. There are a bunch of different options here for single-sided staking, dual or triple liquidity provision, and also lending. So, to end off with a bit of speculation, we can consider the future. Right now, most altcoins are down massively, with many more than 80 or 90% below their all-time highs. Tron, however, is actually up slightly against USD since the beginning of the year. If we take a look at TRX charted against Bitcoin, we can see it is up significantly, and the same goes for TRX when charted against Ethereum. This goes to show that while the majority of crypto has been crashing, Tron has seen a lot of relative strength. This leaves us to wonder, how would Tron be performing if we were in a bullish market condition? Whenever those conditions return, could Tron end up being a top performer after being mostly overlooked during 2020 and 2021? Let me know what you think down in the comments. So guys, this is some details you need to know about USDD and TRX, because I think that while there is definitely an opportunity here, this is also still crypto, and this is DeFi, and it's still very risky. And also it comes down to how much you trust Justin Sun. Well, I don't trust him that much, but just looking at the structure of TRX and the structure of USDD, I do think there is an opportunity here, but of course you have to weigh the risk compared to the rewards, of course. Are you willing to, risk your entire stack of USDD for the 25% or 30% on USDD you get in yield? That is, of course, a decision you have to make for yourself. In essence, I would say don't put more than you are willing to lose into USDD or Tron for that matter, also now that it's tightly connected to USDD. But the structure in which this is working is very different from UST. So you should not make a one-to-one, comparison with them. So that's what I got for you today in this video, guys. Thank you so much for watching, and I will see you in the next one.